up? What's up? All right, all right. Let me turn my music down. What's up, Mr. INC? How you doing, man? Who else is following today? Noble? Not too many people on the tube this morning. All right, let's talk about this week. On Monday, North Korea, I believe, tested a hydrogen bomb, which is crazy. On Wednesday, I believe the Chinese market fell like 7 or 8%. And we got Trump freaking Instagramming. You know, when Trump starts Instagramming, you know the world is coming to an end. So may the short be with you. Anyway, guys, it's been a rough week for the market. The market had its lowest opening for the year. I think it's the lowest ever, or since like maybe the 1940s. So the market is in free fall right now. And a lot of it is because of the global market. Like I said before, North Korea had a hydrogen bomb on Monday, even though they're telling everybody that they didn't test it. And like I said before, China is dropping. So if you're buying stock right now, I want you to be a little careful because I believe the market is going to drop probably about 10 or 15%. So everything is on sale right now, and if you've been looking to get into the market, this is definitely the time to do it. What I tell most people that are getting into the stock market, you got to treat it like a business. You know, if you treat it like you're going to a casino and gambling, then in essence, you are gambling. But if you treat it like a business, if you go and you look at the you know, what the performance of the stock has done over the last 52 weeks, to see where the high and low is in relation to where it is right now, and you decide on a particular price that you want to get into, then you know you're starting to treat it like a business. Treat it as if you were going to buy a car or a house. I don't understand why when people are investing in stocks, they don't do the same research as in buying a shirt or a pair of Jordans. So treat it the same way. You know, I have people all the time that say, hey, I bought Apple the other day, but they have no idea how high Apple has been or how low it's come from. You got to do your homework, guys. You got to look up the stocks. There's different tools. Everybody has a smartphone now, and on every single smartphone, on the very front of it, I think there's an app or a tool that shows you stock tickers. You know, start plugging in some stocks and start watching them just to see what's going on with them. This morning, I sold all of my tech stock. Why did I do it? Because when the market is falling like this, I'm going to buy back the same companies, but I want to buy them at a lower price. So I liquidated about 20% of my portfolio. Now that's only in my swing trades. And for you beginners or for you advanced traders, a swing trader is somebody that buys stock. They buy and sell over maybe a month, you know, 2 weeks or a year. You have your midterm traders that like to hold trades for like maybe a year or two, and then you have your long-term traders that like to hold trades forever. I'm not telling anyone to go to their 401k and to start liquefying it. But if you are a swing trader or an advanced trader and you're looking to get in and out of trades, this may be the time to you know, soften your position. I'm not saying sell everything, but sell maybe 20%. You want to have some cash available just in case you want to buy something else. This morning I bought Twitter. Why? Well, we're on Periscope right now, and Periscope is growing. I believe Apple named Periscope the #1 app and the most innovative app from last year. So that's a good thing for Twitter. Twitter, I believe, when it IPO'd, which was its initial public offering, meaning when the stock became public for everyone to own, I think the initial public offering price was right around the 40 or 50 range. Right now, the stock is at $20, and I believe it dropped to about 19. So that's actually a good price to buy Twitter, at least for me. I didn't load the boat. I took a small position, and if it goes lower, I'll buy more. I'm also looking at Under Armour. Why? Because they have Stephen Curry on the roster. They have Tom Brady on the roster. They have Misty Copeland, who I have a secret crush on. Uh, they signed Jordan Spieth. If you're a golfer, you'll know who Jordan Spieth is. Hunter Mahan. They also Julio Jones, if you're a Falcon fan. So so uh, so those are the particular stocks that I'm watching. Under Armour, Twitter. Again, I like Chipotle. Uh, some other stocks that I was looking at, but those are the stocks that I'm looking at. You know, your job is to buy what you're interested in, what you know. Don't buy stocks just because I'm buying it. Buy stocks because you've done the research on it. Now, I had a couple of questions that came in that I wanted to answer for you guys. So the market right now is very, very, very volatile. And there's an actual indicator that can show the volatility of the market, and it's called the VIX. The VIX is the volatility index, and it's the VIX. Chipotle, even with all their health issues on the news. Yeah, I like Chipotle. We'll go back to the VIX, but yeah, I like Chipotle just because the stock is down 20, 30, 40%. I love to buy stocks when it's 40% down, just like a shirt. If I see a shirt that I want and I see that it's 40% off, I want to buy it. I believe fundamentally the company is still intact. To be honest, I was in Chipotle the other week, and you know, I started asking around just to see if anybody even had known what was going on. And because I'm in the stock market, I definitely know what's going on with Chipotle, but most people don't even know. They don't know that they had an E. coli scare. I also talked to a CEO of a food and drug administration company. He's pretty big time, and he says that this is something that normally happens in that particular market. And he told me not to worry. They put everything in place, and to be honest, this is probably the best time to eat there because everybody is on alarm. They're like, you know, they want to make sure that everything is good. So I'm holding that stock for like a year or two. So, you know, I look to get a 50 or 100% return. So I like Chipotle. But back to the volatility index, which is the VIX. You can follow that ticker. Anytime the VIX is above 15, there's a lot of volatility in the market. Volatility is good and bad. Volatility is great for day traders. Bad for people that are holding stock because the market can go up or down 20, 30% in your stock. And, you know, if you're looking at your stock every day, wanting it to grow, you know, it's gonna hurt a little bit when you look at it. So the volatility index is definitely something that you want to start tracking when you're day trading or buying stock. Another question that came in was, what is your take on trading during the first 15 to 30 minutes of the market? Now, when the market opens, the market is open from 9:30 until 4. At 9:30, I'm an advanced trader, so as long as my arrows are telling me that the market is either short or long, I'll take a trade at 9:30 or 9:31. But as a beginning trader, I always suggest that you wait until at least 9:45. Let the market digest what's going on, and then right around 9:45, you definitely want to look at your indicators and make sure that everything is in place to trade. So 9:45 is a good time to trade. I also only trade until 12 o'clock. I trade from 9:30 to 12. That's my trading day. Now, I work all day looking at charts and doing statistics, but I day trade from 9:30 to 12. I don't go outside of that range. I don't trade before 9:30. I don't trade after 12 o'clock. Once 12 o'clock comes, that's it. I don't trade anymore. The reason why I don't do that is I like volume. Most of the volume that comes into the market to purchase stock comes in right around 9:30, and usually at 12 o'clock, everybody goes to lunch. Now, there's another volume also comes in again right around 2 or 3 o'clock, but during that time, I'm either on the golf course or picking up my kids. So I personally can't trade from 9:30 to 4. My trading day is only about 2.5 hours. The last question that came in was, are arrows signals or confirmations? And I'll show you guys on the charts. So let's look at some charts right now. Are there any other questions before we look at charts? None? All right. Hold on. Oh, Lord. Man, how do you... Okay. Cool. All right, let's look and see how the market performed today or at this particular time. Right now, the Dow is up 13 points. The NASDAQ is up 5 points. The S&P is pretty flat. The New York Stock Exchange is down 26 points. Again, guys, these are tools that traders use to get an idea of how the market globally is doing. And anytime the market is up 1% or down 1%, it's a big deal. All right, let's look at some, if you notice, this is my portfolio now. I liquidated pretty much. I sold my Apple this morning. I sold my Amazon. I sold Google. I sold Netflix. I sold Baidu. I sold, what else did I have? Oh, I had Alibaba. I sold all my Chinese stock. I picked up some Twitter, and I'm still holding my position. I'm looking at Under Armour, like I said before. And I'm looking to start building some more positions. So for you day traders or anybody that's, any of you beginners, this is going to be a little bit advanced for you guys, but you can still follow. All right, the question earlier was about these arrows. All right, again, I'm trading the mini Dow futures, day trading. It's the YM. All right, I'm using $4,000 to trade. All right, if we look at the price over here, for every dollar move, I make or lose $5. So 16,450 if I go long to 16,460, that's 10 ticks. That means I make $50. Well, yeah, 10 ticks times 5 is 50 bucks. I make or lose 50 bucks. So my goal every day is to make 100 ticks or $100. 100 times 5 is 500. So on this 15-minute chart, when I woke up this morning, this is 8:30. At 8:30, there was an arrow. All right. At 8:30, there was an arrow, which was red, which is here. Once you see that red arrow, that lets you know that we're probably going to be short all day long. This is the 9:30 mark. Okay, I've had questions before, why didn't I go long? Because of this green arrow. Well, I didn't go long because when this green arrow occurred, this is not 9:30, this is 8:30, all right? Around 9:30, a red arrow had formed. So once this red arrow formed, my bias was short. Once I saw this red candle here form, I love the colors to match, red, red, that means I short. So all my positions today were short, all right? Well, to be honest, I didn't take any trades today, so I'm really upset with myself. I actually ended the week up 10%, which is good. You know, some people make 10% in a year. I made it in a week. I made it in a couple of trades, but I was upset with myself because I should have made 40 to 50% this week, and I didn't. So I'm beating myself up. Now, this is the 15-minute chart, guys. The 15-minute chart means that each of these candles takes 15 minutes to form. So if this was formed at 8:30, this is the 8:45 candle. This is the 9 o'clock candle. This is the 9:15 candle. This is the 9:30 candle. All right, this is the 15-minute candle. I use the 15-minute candle for my bias. Once I knew to go short, I go to my 1-minute candle. Let's look and see what the 1-minute candle, the 1-minute candles did today. All right, at 9:30, once I see everything goes red, I got my red candle up on the 15-minute candle. I look for a red candle on the 1-minute candle. There's a red candle there. So as soon as a candle forms this red, I got red and red, that means short. So I get in right around this level. That was my first trade. First trade broke even. The first trade only went about, actually the first trade went about $300. My target is $500. It went $300. I didn't take the trade because I'm a bum. The second trade that came in right around, it looks like 10 o'clock. This yellow, another red arrow formed. Once this candle goes red, you start shorting. This particular trade went 68 points, which is $340. But look, it came all the way back to break even. The last and final trade of the day was the best trade, and that trade occurred right around 11 o'clock. There was another trade here that broke even. And then this was the last trade of the day. It was at 11 o'clock. My target hadn't been reached all day. I'm a bum, so I didn't take this particular trade. But there's your red candle. We look back at the 15-minute candle, 15-minute chart. No other candles formed, so you still have that one red candle. So that means red up top, red down low. You get 3 reds, 1 up top. That was 1. This arrow right here is 2. Once I see the third candle that confirms that we're short, I take a trade somewhere in this area. It looks like I should have taken a trade right around the 16,453 mark. The trade went all the way down. Let's see what the low was. Let's do the math, guys. Remember, every 100 points is $500 that can be made or lost. It went my particular direction. It went all the way down to 16,342. Now remember, I got into the trade at 16,452. So 452 minus 342 is 110 points. That means that the trade went $550 in my direction. Remember, every dollar that it goes down is $5. So it went 110. So you multiply the 110 times 5, and I believe that's 550. So the trade went all the way, it hit my target for the day, and then it went all the way back to break even. Break even means it goes all the way back to the price that you entered. Now remember, you can make money going long or short. Again, I said this is for your advanced traders. You can make money going long, but you have to pick the direction. So in this particular case, I should have decided to, I wanted the stock, or I wanted the futures to go down, and it did. So once it went down, I would have capitalized on any drop under 16,453. Now, if it had gone above 16,453 and I chose to short, then I would have been losing money. My risk to reward is 1 to 5. So I risk $100 to make $500. Today, I made $0 because I'm a bum. And again, guys, this is a strategy that I created for myself. It works well with my personality. It's not going to work for everybody. And that's why you have to treat this like a business. You have to come into this and you have to practice. And once you practice, you develop your own risk to reward ratio. You develop your own targets. You develop your own strategies. I can give you the basis, but it's up to you to make it happen. And that's what I like to tell most people. No one's going to make you a millionaire. You're going to make yourself a millionaire. And if you don't want to put in the work to do it, then, you know, the stock business is not for you. It's rare that I see anyone that can make money for somebody. You're going to always make more money for yourself. So again, guys, that's what Joel would do. All right. Now, whoever's watching, you know, if you ever decide you want to trade, you have to develop what you would do. But this is how I trade. This is how I make my living. This is how I do things. And if you have any other questions, you can definitely send me, you can go to my website at whatwouldjoeldo.com. I think it just went live today, so don't be surprised if there's still a couple of posts on there that are basic. I haven't posted anything there. You can go to Twitter, you can go to Instagram, you can find me at www.joeldotv. pretty much at Instagram, Periscope, Twitter. You can go to Facebook and find my group, which is called Ninja Trading, to see a couple of posts. And if you have any questions, keep them coming. All right, guys, I'm signing out. Thanks.